from the floor of the CME Group, this is Danny Riley on today's closing print, and we're right on the close. You know, the Fed maketh go up and the Fed maketh go down. You know, and in the big picture, that's what's going on here. They ran the sell stops down to 1550. Now they're running the buy stops up to 1600. Like the pit bull says, it's like moving water around in the bathtub. Now, 2 days in a row, the S&P has rallied late in the day, only to be faced with a big sell imbalance, and the MrTopStep sell imbalance meter showing big for sale. Now, yesterday, the S&P sold off accordingly, and today it's coming off a little bit, but not like it did yesterday. The high of the day in the S&P came in at 1601 even late in the day. The low came in at 1588.70 mid-morning, and last were 1597.5. We're up 16.1 handles. Total volume is low. We've lost a lot of our volume over the last couple of days. After doing 2.5 to 3 million minis for about 3.5 weeks, yesterday we only did 2 million, and right now we've got 1.65 million minis traded and only 3,000 big S&Ps traded in the pit. MOC, we had another 1.2 billion to sell. Wow. You know, this has got a lot to do with the end of the quarter and all the rebalancing, but it's obvious that there's a lot of selling going on underneath the market. Now, tomorrow we've got the jobless claims number, we've got personal income and outlays, we've got Bill Dudley from the Fed speaking, we've got the natty gas numbers, we've got Jerome Powell speaking, we've got Dennis Lockhart speaking from the Fed, we've got a 7-year note auction, we got the Fed balance sheet, and we got money supply. Ugh. Wow. But anyways, you know what? The economic calendar was light in the beginning of the week, and it's loaded up in the end of the week. Now, last but not least, over the last 10 trading days, when you total up all the MOCs, they've sold $6.5 billion in stock. That's an amazing thing. And we also want to remind everybody about the big Russell rebalance on Friday. Put it on your radars. Now, you know what? Big thing that we used to talk about it. It's one of the pit bull's rules. And before we adapted it to the monthly expirations, it's called the walkaway trade. That's where the mutual funds use up all their money on the last day of the quarter by 11 or 12 o'clock, and they walk away, and they leave the S&P susceptible to some type of little sell-off. We don't know how that's going to end up, but you know, the fact of the matter is the S&P's recovered, but it doesn't seem all that strong, and there is an abundance of selling going on here. Now, over in the bond market, real quick, we did close up 26 ticks, so we're getting a little firmer bond market here. We'll see it tomorrow on the opening print.